following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's make it a great week. Busy week, Fed week, career, CPI, all of the above. Don't make assumptions. Be yourself around others. The biggest assumption that humans make is that everyone sees life the way we do. We assume that others think the way we think, feel the way we feel, judge the way we judge, and abuse the way we abuse. We are afraid to be ourselves around others because we think others will judge us, victimize us, abuse us, blame us, as we do ourselves. Market-wise, let's take a look at it out here. We have the Dow Industrials up 64, Nasdaq up 27, S&P's up 9, gold contract up $1.10, trading at $13.0380 an ounce. Silver up 21 cents, $16.95 an ounce. Copper down 5 pennies at $3.25 a pound. Light sweet crude up 37 cents, $66.11 a barrel. Notes and bonds. We get the 10-year note down 5 ticks, 119.13. 30-year bond down 13 ticks, 142.25. Now they both are backing down, folks, at dramatically lighter volume. They want higher price, lower yield. And what I expect we're going to see out here as we're kicking into bottom line Wednesday, even tomorrow. Bottom line, you'll be kicking into the good old Fed, and where the Fed is going to be going with the short-term rates. The market's expecting that they're going to go up 25 basis points. It's all going to be about that statement afterwards. King dollar. King dollar right now is up 28 ticks, 93.565. King dollar has managed to stay inside its higher range. King dollar is fighting over the 93.440 number. We got underneath it today. Still light volume, rejected price. Bottom line, still wants higher price. Euro. Euro is at 117.85 to 1 US dollar. The yen is at 110 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of Bitcoin, folks. That baby took a nice beating. Sunday night, bottom line, it goes from 76.96 to 67.55. Broke the lowest swing point at 7,000. That sets up a test of the low. The low out here from the 6th of February is 59.22. And bottom line is that you're not that far away from it. That was quite a hit that the Bitcoin did take, and that had to do with a heist in Korea over the weekend. Gold contract. So let's go take a look at the gold contract. What we have with gold is this. Gold traded to 1307 today. He's done 200,000 contracts. Not bad. Bottom line, sideways movement. This consolidation is still on. And gold has to basically get back inside the 1315 to get anything going. Silver, different animal, man. I mean, and it's intriguing inside the silver market because silver has continued to catch a good bid. We're up 1.2% out here today. You have volume behind the move again, 73,000 contracts, so it's good contract volume. You get price spread behind the move. We're over the highs of last week. The highs of last week was 16.93. We made it to 16.97. We're at 16.95. The silver contract wants to go after the swing high from April 19th, which is 1742, and it looks like it actually wants to go after 1787. So we'll see if in fact silver is going to be the animal that drags gold to higher price. Silver normally is much more volatile than gold, and it's very unusual when you see silver move and gold hasn't, but that's what we have right here. Notes and bonds. Let's go take a look at the 30-year note. The 30-year note back down, dramatically lighter volume. We're talking about 200,000 contracts. The 200,000 contracts are going against the strength of last week, where we had 416,000, as well as the monster strength on the 29th of May, where we had 602,000. So the way that this is basically setting up right now, which is pretty cool, this is setting up for higher prices as we come into the Fed statement Wednesday at 2. That's how this baby is set up. The King dollar out here, that little baby is wavering between the aspect. We got the 93.355 today, gets down, light volume once again. So, you know, I suspect tomorrow, and good old King dollar, more than likely we're going to get a sideways move coming into that Fed statement at 2 o'clock. Some of the higher volume equities out here, this is what we have. You have Advanced Micro is up 63 cents. You had Fitbit, that caught a bid. Fitbit's up $1.17. We got General Electric flat. Boston Scientific is up $2.50. On Boston Scientific, they're going to do some kind of deal with Stryker, and they did resume. They had halted both of those stocks. Boston Scientific, before the halt, went from, I think it went up to 37. Let me just look at this for a second. Yeah, so Boston Scientific went from a price point at 1030 from 32 to 37.30, and we're going to be hearing more about Boston Scientific. The reason being is that, and when folks do this, it's always a mind blower, because it is so easy to get caught inside the option market, folks. What had happened, this came across the Bloomberg, that Boston Scientific option traders placed heavy bets on last Friday's session. There's a couple trades out here that I suspect the SEC is going to be all over. So what you had, let's see, of the 20,919 32 call contracts that changed hands on Friday, you had one block of 7,482 that was bought at 72 cents. You had an additional lot of 5,739 35 calls, and then you had one block at 4,900. So bottom line is that, yeah, they're all in the money, but when you see this come across the tape, it's just amazing. Inside the option market, bottom line, they're going to want to know what they knew, when they knew it, and why they put that many contracts on. Now, what ends up happening is that if you are a large options trade, when you're doing that all the time, not the end of the world. You're not going to basically, they'll look and say, okay, you're always doing it. Most times what you have when that happens, it's someone that hasn't traded options. They throw a bunch of options on. Guess what? Insider trading, they're in trouble. Stay right there, folks. Coming back with I'm Mr. Steve Rhodes. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 66, NASDAQ up 27, S&P's up 9.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve has an outstanding show right here at TFNN every trading day, 1 to 2 Eastern Standard Time. He also has a great newsletter, Mastering Probability. Now, the way you get this newsletter, you go to newsletters. When you get to newsletters, you're going to hit Trading Newsletters. You're going to see Mastering Probability right there on the right-hand side. You hit that, 30-day money-back guarantee. Check it out. Steve Rhodes, what's going on?
Well, I guess it's back to baseball because hockey is done.
I know. That's a drag. Right?
It is.
Yeah.
It's such a great time of the year, and congrats to the Washington Capitals. I was trying to get a picture off of my phone. I forgot that I just kind of forgot that I had. I wanted to show it to you. It was from my daughter, who on Saturday. So Ovechkin was out taking the cup to show basically everybody.
Okay.
And she was right with him, right next to him. Touching the cup, the whole thing.
Wow.
Yeah.
Really?
Yeah, it was great. I can't figure out how to get it off my iPhone. I will, but in any event, I was going to show it to you because, just picture, it's just like you just sitting there doing something. You get this text message like from Tommy.
That's
and he's
crazy.
sitting there, with Ovechkin in the cup. And, just a crazy celebration of,
and
inside.
was she in Vegas then, or when you were back to D.C.?
Was back in D.C.
Cool.
Back in D.C.
Okay.
So she lives in D.C. She's the project she's working on right now. She is one of the key people that is responsible for building the Dwight D. Eisenhower Memorial in Washington D.C. Yeah, so she's and her company has tickets to a lot of the sporting events, and she was at every home game, which was pretty cool.
Wow.
Go watch the games out there. So I'll be with her in a couple of weeks.
I was going to say, you're going to have to be with her at the opening game next year. That'll be insane.
Yeah. Oh, my goodness. Yeah, no question. Yeah, good thing. I got to remind her about that. Get tickets now.
Totally.
Absolutely. So, hey, I want to introduce you to Bob.
Bob, I saw that. Let's talk.
Yeah. Bob is a hard-working guy. And he is part of, you can see he's got his toolbox out there.
Yeah.
And he's a part of Mastering Probability. And Bob is designed to answer the simple question, bullish or bearish, and that's where Bob comes from, either bullish or bearish. And Bob uses the same tools, Tom, that I've used to earn me that #1 ranking inside Timers Digest.
Yes.
Still, they just came out with their most recent report as of June 1st of 2017 through the 18. I still have a nice lead.
You got a good lead, too.
I do.
Yeah,
I do.
you do. Right.
Just got to keep it.
That's right.
That's still
That's right.
for the last 12 months, 3 months, 6 months out there. And so what I did was, you and I, we talk about all these different patterns. And, for us, it's our normal language.
Yes.
But for all of our listeners out there, and, many of them want to learn the different tools that each of us use here at TFNN. It's a lot, for us, it's every day. So the question was, how do I take the entire set of tools that has helped me to become that #1 market timer and put that into a system where just simply identifies for all of my subscribers whether the instrument that they might be looking at or what we're looking at is bullish or bearish, and what version of bullish or bearish, because there's different levels of bullishness or bearishness out here. And this is an example of taking, which will start to be included in each of the daily newsletters out here. This takes a look at the S&P 500, or the index ETFs, what I should say. So you got the SPYs, the Qs, the diamonds, and the IWM, but it takes the sectors of the S&P 500 and goes ahead and provides rankings for those. Now, this here is showing multiple time frames. So how this is intended to help subscribers is in managing their long-term portfolios. It's going to be for traders and investors. The only difference really, it's for me, the difference between a trader and an investor is just your time frame horizon.
Sure.
You still need to know, on your time frame horizon is what you're looking at, bullish or bearish out here. And so I'll put together a workshop for all subscribers who work with Tommy over the next week or so, as I have this tool completely done. But in an instant, now this is going to be a way for individuals to actually rotate, see the rotation going on inside the sectors in the S&P 500, and determine where to go ahead and allocate their portfolios for those portfolios that are tied to the SPYs, to the S&P. No reason to have to be in all of the sectors.
Right.
You can rotate out of the weak sectors, and this will tell you which are the strongest sectors and where to go into. This is also great because what subscribers and I do each morning, Tom, is we take a look at what's going on since last night's close, what's going on inside the equity futures contracts, and we take a look at not just the equity futures contracts, but what's going on in metals, what's going on in oils. We start taking a look at what's going on in grains out here. And here, this shows the versatility of Bob, bullish or bearish, where we can take a look at multiple time frames. This chart is taking a look at 30 minutes, a 2-hour, a 5-hour, the daily time frame. And what it also is doing, because I believe the larger time frame is something you always want to be aware of, is where are those support or resistance levels inside of those larger time frames. So for those folks that are driving home and listening to this, you can get access to this information by subscribing to Mastering Probability. If you are a day-ish type trader, intraday trader, you want to be able to start your day understanding what the posture is for these instruments on multiple time frames so that you know what you're up against. You want to understand where the ultimate support or resistance levels are. And as I mentioned, I'm really looking forward to this assisting each of our subscribers with regard to their long-term management portfolios out there, where to be and where not to be. And this here, if we take a look at this chart, this is taking a look at most wealth managers. All wealth managers are taking a look at portfolios and, depending on a number of facts and circumstances, are going ahead and putting their clients' money to work inside U.S. equities, foreign equities, fixed income products, and then some other things, some real estate, investment trusts, some commodities, and so forth. And here, what this does, this is a kind of a portfolio mix that TD Ameritrade has tracked for the last 21 years out here.
Okay.
And so what I've done is put this together, and we'll continue to work on this for a longer-term strategy so that subscribers will know where it is that they should be rotating their money into. Now, some of it is logical, but all you hear, or all I've heard a lot, is about being inside emerging markets. Well, right now, from a daily standpoint out here, it may not be the place to be if you knew what Bob knew, and that's what I want all of my subscribers, to be aware of. So it's a great tool. This also, I've got another piece of this that helps us identify tops and bottoms, so you can get an early entry into either side of the trade. And all folks have to do is come over to the homepage of Mastering Probability and go to the newsletter section and give Mastering Probability a try for the next 30 days. So you'll be hearing a lot about Bob.
Bullish or bearish, it's a beautiful thing. And folks, if you were in your car, remember the program's archived. You can basically take a look at the video. Just Steve's on the first section, 20 past. Hit the video, and you're going to see the setup, because it's a really clean setup that he showed with all these different charts. The way you get the newsletter, come to TFNN. Go to newsletters, go to trading newsletters. You're going to see Mastering Probability right in the top right-hand corner. Hit that baby, 30-day money-back guarantee. It's a beautiful thing. Steve Rhodes,
thanks, Tom.
Have a great one, man. Have a safe one. Look forward to the show tomorrow.
Thanks.
Okay. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Dow's up 69. Nasdaq's up 28. S&Ps are up 9.5. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 66. You get the Nasdaq up 28. S&Ps are up 10. Let's go over and take a look at the GDX. So the GDX, as gold has continued lower, basically sideways. The equities have basically done a lot better than the actual physical metal. GDX out here today, you're up 16 cents. That's not a huge amount, but bottom line, you're going after the top of the range again. The top of this range lays out. You got one number at 22.65. We get another one up much higher at 23.30. As we come into this close, it looks like they want to buy some of these equities because the first little pop came in right at 10 of 3 at that 22.45 mark. And what I do expect we're going to see is that you'll see some volume coming in at the close. If we go take a look at the largest weighting structure inside there, Barrick Gold is getting a bid. Barrick trading up 18 cents. You've done 5 million shares. 5 million shares for Monday is a pretty good deal inside Barrick. Newmont, we go take a look at Newmont next. That'll be the second largest weighting structure. Small bid. Newmont needs a little more juice, as do most of them, by the way. Most of them actually do need more juice, but this is a start. This is basically a start. The XAU, we take a look at the XAU. XAU has a nice, basically, move out here today. We went from 82.46, and we're at 83.64 right now. That is getting to the top of the range. Top of this range, the consolidation that we've been in here since, about a month and a half. You're dealing with 84.49. Right now, you're at 83.65. The Gold Bugs Index, which has been weaker than the XAU, has definitely caught a bid. Now, this is a really good setup, and this is what we're going to need in order to get the metals up. This is up $1.48. We went from 177.55 this morning, rejected the lower price, and we're at 180. I like the setup. You know, the top of this range is running at 182. This is actually looking like it's just ready to also break the downtrend that has been in place. It's a small downtrend, but since the April 19th level. April 19th, we're at 186. That trend, when you take a look at it, it's 179.97. So you've broken that. What I'd like to see into this close, I'd like to see this is up at $1.47. If that can get up about $1.65, you'd have a decisive break, meaning that when you're coming into those types of trend lines, any type of trend line really, a break with conviction, which is wide price spread, volume behind the move, gives your probability much higher that that's where that equity actually wants to go. Let's go take a look at the copper market. So copper has been on a tear. Gave up quite a bit out here today. Copper pulling back. Let's go see where we are. Copper, there we is. So we're down 1.3%. Yeah, not the end of the world though. You know, bottom line, 8 days ago, copper was at $3.01 a pound. Yeah, 320. You're still at 325. You've done 119,000 contracts, so let's take a look at that. You got 119,000. Yeah, it's a pullback on light volume. So bottom line, copper still wants higher price. Let's go take a look at a few of those equities. You got the Southern Copper. Yeah, that's a pullback with light volume. 413,000 shares versus 1 million. And TGB, which also a copper equity. This got to a higher high. TGB came off the bottom really nice last week. You know, we were trading down at $1.05. It's at $1.34 right now. Big number. This is definitely a personality stock. If you jump in something like this, guess what? If you catch the run on copper as it goes higher, you know, don't basically hang on to this baby. This is definitely a personality stock that runs with the price of copper and runs pretty dramatically with it too. You know, so this has a high out here from 2010 at 723. You know, and then he has lows of 31 cents from February of 2016. So you can see the type of volatility that you have inside of this equity. If we go over to, we go from copper to uranium, Cameco. Cameco CCJ, the low for the year is 768. The high is 1216. Now, it's going to be interesting. This baby caught a really nice bid last week. Takes out a swing point, has volume behind the move, and we do bring this back. This thing looks like it wants 13 bucks. 13.36 from January. You get a high volume swing there. Bottom line looks like it's building some cause to get up into that level. We take a look at the NDX 100 as we come into the close. So the Qs are going to be important coming into the close. The reason being is that they're right at the line that they've been fighting about. And that's 175.21. So 175.21 is the high from March 13th. We had this 55 million shares traded there. We got over that high last week with 25 million. Then you gave it up. Bottom line, we'll see whether it can hold. You're going to have anemic volume out here again today. You know, when we got over it last week, you did 25 million shares. Today, thus far, you get 18 million. Now, the way this shakes out is this. If we go over it, guess what? You can go higher. Bottom line. If we fail, and you are failing, let's say we get 18 million now, and they'll put, you know, we'll see whether they can put 5, 6 million into the close in the queues. If they can't, and you close underneath that, that is going to be a big heads up. And this is why. You had the failure on the daily and on the weekly last week. When you get an additional failure and your volume contracts, it's a big number. You know, I typically like to see, I'd like to see one more test after that. Because if you get 3 tests of a high, and each time your volume contracts, your probability just gets much higher that that's all she wrote. And in the Q's case, what has not been tested, which is a monster consolidation, is 150. The, you know, February 9th high volume swing low hasn't been tested. Bottom line, many of the stocks have already tested that area. If we get over to the SPYs, what you're going to see is that number on the SPY is 252.92. You know, we got down to a 254.67 in the SPY on April 2nd. So that test really was there. I believe the small caps haven't tested either. Yeah, the small caps not even close. Pretty amazing, actually. Small caps, that number is 142 or 166. And the small caps in general, they took another leg up. And in fact, if we take a look at this, when I did this one, 151, that's 12 bucks. That's 172. Yeah, I mean, the small caps are saying they can go to 172 before you even do a pullback. Because what you do have there is that you have the aspect of, when we took that leg up last week, that leg up did have some juice underneath it. There's some decent juice that was underneath that move. Let's go over to Bitcoin. So Bitcoin, this is a big number. You're down 883 bucks. You know, so we took out one swing point this morning on the, well, when I say on the open, what happens is that the way that Bloomberg does it is that they basically trade where the, there she is, where the exchanges are trading. So like the exchange volume today, why can't I get this? 1 second. Stay right there. As soon as I come back, I'm going to get the exchange volume for Bitcoin. Dow Industrial's up 55, NASDAQ up 26, S&P's up 8.5. We're coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We have the Dow Industrials up 48, NASDAQ up 23, S&P's up 7.5. Let's go to Keener in Dallas, Texas. Keener, what's going on, brother?
How you doing, man?
I'm doing great, man. Yourself?
I am fine.
Yeah?
Absolutely.
Is it getting hot there now?
Are you kidding me? I ride the bike after day trading all day because you got to reduce stress. I'm going to have to start getting up at 5 a.m. It's too hot.
Too hot. Yeah, the reason I'm asking, we just got hot here 2 days ago, too. You know, it's amazing. It seems like where we are, we can go up to like May 30th, and it's still livable. And then all of a sudden, man, it comes in and like, yeah, it's worth it for the winter. But, man, once it goes, it's like, okay, here we go.
Yeah, you're frying egg on the hood of your car.
Yeah, no doubt, man. No doubt. No doubt. So,
all right.
Cleveland.
I'm looking at Cleveland Cliffs, CLF. I'm wondering, I'm in it already, and I'm ahead almost 1% for the day. And I'm thinking, well, since I got it late in the day, I'm thinking, well, I wonder if I should hold it overnight. What do you think?
Okay, so let's take a look. So you get Cleveland Cliffs, you know, decent day out here. It's up 27 cents, but I can see it's coming into this bar from the 18th. So the low is 849. The high is 908. Okay, so let's see. Yeah, I wouldn't be bad holding it overnight, I don't think. I'd move it pretty fast in the morning, I think.
This is the kind when you have a move like this today where the volume's okay.
Yeah.
It's not a down volume on a big up candle because those are always dangerous.
Yeah.
But this one's got a good enough volume compared to Friday. And I mark my volumes in 1 minute and 3 minute increments and 10-minute increments.
Yes.
And there have been some serious buys at prime points all day long, like somebody stepping into it.
Yeah, so I just brought up, yeah, I can see this. I just brought up the bulk trades, and you can see them if you're watching my screen. They're definitely stepping into it. You're talking, you know, 45,000 shares, 34,000, 34,000, 50. Well, I won't count 930, but 55,000. There's a lot of very large trades. There's no doubt.
That's right, and that's one of the things I track is when I see the volume spikes on those that are primed to have some upside. They're candidates, but then you always kind of wonder, okay, should I take a small profit or hold?
Well, where my head's going, I agree with what you're saying big time. Where my head's going with this is that, and the reason I'm saying for a day is that, you know, you're coming into this vicious downdraft. So it looks to me like it's going to fail, but it looks to me like, guess what? It wants to test the $9, which is another 25 cents. You get it in the morning, I just get out of town because what I expect you're going to have is that we're going to have news coming out of Korea. You're going to have, they said they set a deadline, so it looks like Kim Jong-un and Trump, they're going to be shutting down earlier than expected. So they're going to be, let's see, they're going to be talking for approximately 7 hours. And they're both getting on the plane right after that. So, you know, we'll see whether that affects the market. But the bottom line is that, you know, at the top of this range, I'd get out of town.
Yeah, I thought it had a little bit more upside. 25 cents sounds pretty much what I was looking at, too.
Yeah.
What do you think about the idea of trying to screen for these high volume on ones that could do an ABC up, for example? Like this one could have done an ABC up. You
And
look
it
at
still
that
might be.
from
No,
late May.
No, I agree, and it still might be. Yeah, you know.
Yeah.
On the daily, it would be. Let me just look at something else.
Yeah, I'm looking at the daily on it, going back about May 30th. There's a good solid A leg there, and then it goes flat on us a little bit.
There is, which is good. You want the strength. Yeah. No, I like the setup. What I don't, you know, like if we go over to just comparison, we go over to Valley. What you're going to see there, you know, they're in the same business, and that's not a bad-looking chart, even with Brazil being a wreck. You know, so I'd wait and see whether you get the volume or not, man. That's the bottom line. You know, what you have in here, fundamentally, and I'm not quite sure, I don't think any of us really understand how this is going to shake out yet. So they're in the ore business. You get the tariffs on steels, but you see that number down there, 25% of their business is exporting to Asia and the Pacific.
Yeah.
So it's like, okay, well, if we're putting tariffs on it, they're going to be tariffs on the other side of that. You see what I'm saying? And if the news isn't out in that yet, that could be a problem, child. You know, because
I saw X went up in the morning real fast, and then it came down real hard. And then that one I can't pronounce starts with a G. It went up and came back down real hard. And so I think there's some players out there gambling both ways, and I'm not sure whether the froth is too dangerous, you know.
Yeah.
Just take your money and run.
Yeah, all right.
Just take your money and run.
Take your money and run. Hey, that's what it's about.
Yeah, small gains better than a big loss or a small loss.
It just depends, yeah, it just depends on if you can go to sleep and groove and not think about it all night, do it. If you're going to be thinking about it all night, just take your bread, man.
Oh, no, I don't worry about them. If I make a decision, I live with whatever I must. If I'm stupid, I live with being stupid. If I'm smart, I say, look how smart I am.
I'm with you. It's not the end of the world. I'm with you, yeah.
Thank you.
Okay, man, have a great one. Have a safe one.
You too, man. Bye.
Thanks. 877-927-6648. Coming into this close, it looks like basically you get a sideways market out here. Percentage-wise, you know, we're at such large numbers right now, folks. Even though your Dow's up 0.2%, S&Ps and the Nasdaq are up 0.3%. If we do go over to the actual index, the NDX 100, that is trading at 71.81. And 71.86 is the number on this. That would have to close over. So it doesn't look like the actual NDX is going to get up into those numbers. Let's go over to Snap. One of the tigers want to take a look at Snap. So the low of the year is $10. The high is $21.22. And so you're right into the gap here. So this gap down from 1375 on May 2nd to 1096. Yeah, I'd be careful here. 1375. We hit 1365. Let me put this back a bit. Yeah, this is interesting. So I can see what Tiger's looking at, though. Interesting. And what I mean by that is this. This had a monster sign of strength in February. Went from 13 to 21. Had good juice, 467 million on a weekly. But then it got crushed with 338 on a weekly. We went up last week with 219. That's not bad to start taking out a supply line. The problem is that when something is this damaged, most times what you're going to see is that it has to build a lot more cars to get up and over that downdraft, which would be the 1455 number. So what I expect you're probably going to see the difference being August 8th would be the next number coming out. Now I can, you know, I get the deal about why folks want to be in this, because the reality is that the way that Facebook has moved, you know, the FANGs in general, it's only a matter of time that Snap, I suspect, will basically get snapped up by someone else. The short position inside that is 20%, 108 million shares a short snap. Stay right there, folks. Coming right back. Dow Industrials up 44, NASDAQ up 19, S&P's up 7. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a when the market's opened and even on weekends. Each month, Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via videos or both the key markets that he is the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 35. NASDAQ is up 18. S&Ps are up 5.5. If we do go take a look at these S&Ps, you get a little selling come into the close. More like we're going to see a flat market here. If we take a look at this and we put this on a 10-minute, we are back to where we were in topside this morning at 1140. And 1140, we had gone topside with 12,000 contracts. The bottom of that is the 2784.50, right where we are. And you're coming into this, yeah, they're coming into some volume. So this thing is going to try to dig into the, is that the open right here? Where am I? Yeah, I see what you're saying. Okay, so the open out here is 2771. I don't see that happening. You got a little weakness. So if we do go inside the Dow Industrials, the strength versus the weakness, strength out here today was United Health. That was up 1.3%. Chevron's up 0.9%. Home Depot up 0.8%. let's take a look at Home Depot. So Home Depot's trading 161. You got a high-end consolidation. This is going to be intriguing, too, because, you know, Home Depot, we hit the high at the 207. That being said, you came off that high with volume, but this is a nice heads up. We did not break a swing point. You know, this baby still looks to me like, first off, you want to test the high. The bottom line, we'll see if we get any juice when we get up to that high. A couple of the other equities inside the Dow Industrials, you have Big Mac is taking it south. That's down 1.2%. Johnson & Johnson's down 1%. Intel's down 0.9%. Inside the NDX 100, strength versus the weakness. Tesla's the strength. Tesla's taking these shots to the cleaners. That's up $14.50. You get NetT's up 4%. Seagate Technologies up 3.5. Taken away from it, AMAT down 2.4. Lam Research, Clack, the chip builders, chip makers, folks, going south. Stay right there, folks. We're going to be coming back with some numbers after the close. Dow Industrials up 30, NASDAQ up 18, S&P's up 5.5. We're going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 5, NASDAQ up 14, S&P's up 2.5. So let's go over to the comp first. We take a look at the comp. So comp out here, NASDAQ comp, what do? We're at 76.59. Bottom line is that this would have to close under the 76.37 in order to be a failure. NDX 100, so the comp, of course, is all the equities that are inside the NASDAQ, which would be, let's see, you got 2,575 members. NDX 100, different ball game, folks. So we have with the NDX 100, you've failed on price, failed on volume again. Let's just go see inside the Qs what type of volume they put into it. Okay, this is going to be pretty cool, so watch how this shakes out. The number is 175.21. That was the high March 13th. March 13th, we had done 55 million shares, which, by the way, was light volume there. You had a failure. That's when we made a higher high, gave it up in one day. We went from a price point of $175 on the 14th straight down to 153. Big number. That move there took all of about 10 trading days. It took us from April 2nd until last week to get back to those highs. Now, last week, what we had done is that we made that high with 25 million, failed again. Well, guess what? We failed again. Now, here's the correlation. 22 million today versus 25 million last week versus the 55 million. So we'll see where this shakes out. That's bottom line saying that there's some selling going on inside that NDX 100. If we go take a look at the individual equities out here, the strength inside it today was Tesla. That was up 4.5%. NetEase was up 4%. Seagate Technologies was up 3.5%. Taken away from it, and this is what's always going to be dangerous, folks, the chip stocks as well as the NDX 100 and composite took us higher. Inside the composite, inside the NDX 100, it was the chip stocks that took us higher. AMAT today, down 2.4%. Lam Research down 2.3%. CLAC down 1.5%. If we go over to AMAT first and take a look at AMAT, that's down $1.26. We had come lower last week. You did get an expansion with volume out here today, so AMAT wants to go after the high volume low that was produced out here on the 18th of May. That's $48.53. LRCX, Lam Research. What did Lam do? Lam came down hard last week. It actually gapped lower. Lam on the 6th of June was trading at 202, opened the following day down at 184. You're at 183 right now. What's going to get intriguing here with Lam is that a close below 181.67, which I suspect we're going to go for tomorrow, is setting up going after the February 9th swing low, which has not get tested yet in Lam Research. And this baby also is sticking out like a sore thumb. Bunched of volume down at this level. Yeah, 156 is game. So big number. Gold market up $1.50. We need more strength inside the gold market. Silver has it, man. Silver, you know, it's really, we have divergence out here. Bottom line, silver closes at the high of the day. Nice setup. 76,000 contracts. Silver wants the next swing point. And what's going to be wild, folks, is that we'll watch how this shakes out, but it's really unusual that silver's catching the bid and gold is not catching anything. It hasn't caught a cold, but guess what? Bottom line is that, you know, we'll see where this shakes out. Gold itself has been battling this downdraft that occurred out here on the 15th. The low of that is 1320. The high is at 1293. And what I expect, more than likely, we're going to see inside the gold contract also, it's all going to be about what the statement is at 2 o'clock Wednesday afternoon when the Fed comes out. That being said, if we go over and we take a look at the 10-year note as well as the 10-year, as well as the 30-year bond, these babies want higher price. So what the note and bond market are saying is that, guess what? You're going to come out with a dovish statement, and we'll see where it shakes out. What I do expect, what's going to be kind of intriguing is this, is that you've had the peso fall apart, you've had the rand fall apart, you've had the peso and let's see, there's a few different, yeah, we had the peso in Argentina fall apart, the peso in Mexico fall apart, the real fall apart in Brazil. These are all against the U.S. dollar. What's going to be intriguing is that, is the Fed going to be talking about that whatsoever? You know, because the bottom line is that what the Fed cares about is monetary policy in the U.S. Reality-wise, guess what? How the dollar goes against other currencies can roll markets and roll markets very quickly because of the fact, and they have all this information as to how many of our managers, how many of our banks basically are in those other markets, that they start rolling over and they don't want any contagion happening. So I suspect what we're going to probably see is that the statement number one, I suspect is going to have something in that about the world economy and more than likely currency fluctuations. And we'll see where the baby shakes out. The euro, let's go take a look at the euro for a second. So the euro's trading at 117. You know, this came down straight down. This came down from 124. We hit a low 2 weeks ago at the 115 area. And we'll see whether they can build any cause to get into a higher price. We put this on a weekly basis. Looks like the bottom of this consolidation looks like it's in. The real question is that it's going to get enough juice to go back topside. Some of the other higher volume stocks out here today, we had, Fitbit. So Fitbit, bottom line, caught a bid out here. That's up 93 cents. That's a big number for a $7 stock. Fitbit in 2.5 weeks, 2.5 months rather, has gone from 450 up to 728. What we had out here today, let's see, they're partnering. Who are they going to partner with? This is interesting. Andrew Left, who's a big short seller, he's got a video out today. He was on Bloomberg saying that he thinks that good old Google is going to go after Fitbit. Well, we'll see. They caught a bid, no doubt. Stay right there, folks. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now up. Well, bottom line, you get flat markets. Dow closed up 5. You had the Nasdaq up 14. S&P's up 4.5. When we take a look at after the market here, let's see what we got. We have Restoration Hardware. They closed at 118. This is trading 132. Now at 118, it was already up $5.50. This is quite a move, man. Look at this. So you go back 3 months, you're at 74. Wow, that is a move and a half. So 74 to 132 in 2 months. People are basically opening up their pocketbook here, folks, because, you know, this is a great store. Is this an all-time highs? This is an all-time highs. This is impressive, and this was an equity that was having a tough time. Now check this out. This is they're going to run the shots out of this market. Holy cow! There's a 35% short position in this equity. So let's see what they have to say. This hit an all-time high today. Okay, so here's the numbers. Look at this, amazing. So they were expecting the comp sales to be down 0.9%. Well, they got a plus 1%. Earnings per share, they were looking for $1.50. They're pushing 170 to 177 right now. For the year, they were looking $5.92. They're looking now 634 to 683. Big numbers, man. You know, bottom line is that that's a big number. And they have, in fact, I keep saying I wanted to go to this monster store. We have one in Tampa. Haven't been there yet, but evidently they basically are hitting it. What it seems like is that when you start looking at some of these high-end companies, they all seem to be doing pretty good. So we went from 2014, 1.6 billion. They're going to push out 2.6 billion this year, an additional billion. Look at that, man, additional billion. That is one big number. They're growing by 9%, so it's a decent number. We go take a look at Play, P-L-A-Y. This is Dave and Buster's Entertainment. They own and operate, you know, the dining entertainment hubs. The low is 37. The high is 70. This closed at $47. This right now is trading at 56. This is a mind blower. Holy cow! Look at this. So this had gapped down from 58 last January. Must have come out with numbers. It went from $58, opened the next day at 43. This is going to be a gap just on the other side of that. And this also is another big short position, 15.92%. Short, 6 million shares short. So let's see what they're having to say. Oh, this is a different ball. Oh, this is they not only beat, but what you're going to have, let's see, we got to change the guard also. So let's see what we have here. So earnings per share, the estimate was 93 cents. They made $1.04. Same source sales, they expected a negative 5.7%. They got a negative 4.9%. Not bad there. The CEO is stepping down. So let's see what they have to say. The first quarter revenue was $332 million. The estimate was $321, so they took an additional $12 million. Not bad. Yeah. And we'll see how this shakes out. So 57, 47, big numbers. Big numbers. Restoration Hardware is really a big number. So picture this. You're up. That was, let's see, 13, 23, 33. Yeah, that thing was up. If we count what we're talking about after hours, you're talking about almost, what, 5 and 18. You have $23 today. Big number. And this will open at all-time highs. We put this back. Yeah, it overtook the 106. It's going to need a lot more juice, but bottom line, you overtook that 106, and it overtook it in spades, big time. Some of the commodities, let's go take a look at some of the commodities out here. I know one of the Tigers was saying, let's see, what day is the WASDE report coming out? WASDE reports tomorrow, so let's take a look at it. You get corn was down 2.7% out here today. We get soybeans was down 1.6. We had wheat off 1. Let's start right with corn. Corn is trading at $3.67 a bushel. Phew, that's a monster move downtown. Evidently, the ethanol we don't need. What had happened is that those farmers out there, it's going to be interesting to see where they shake out with this deal, because they changed something in the EPA that they're not going to need as much corn for ethanol. Corn's in tough shape, man. Corn looks to me like this wants to get that 362. You blow that 362 away, you can get a lot lower price. Let's go take a look at the wheat market. The wheat market's been catching a bid in a big way. So wheat right here is trading. It's down 1% today, or $5.14 a bushel. Yeah, this thing's still at highs. We did 90,000 contracts out here. This looks like it wants to back into where its strength was from 495. Right now you're at 514. And if we take a look at the beans, soybeans right now, they were down 1.6%. Yet they're trading 953. Oh, this is in trouble too. Interesting. Yeah. This is breaking lows. Let me look at the continuous contract here. Oh, SI. There it is. Active contract. See if that's the continuous. Nope. Let me see if I get one more if I need to get continuous. No, I can't get the continuous contract. Well, bottom line, the July contract, this busted out its low of 965. That's a big problem. Yeah, this thing can go a lot lower. That's the bottom line. So we'll see. Now, what's intriguing is that you do have the WASDE report tomorrow, which will move around, of course, the commodities. We'll get the Fed on Wednesday at 2 o'clock, which is going to move around the currencies, which in turn will move around the commodities. Because it's not going to be all about that good old U.S. dollar, about what the Fed has to say when they come out with that statement. And bottom line is that right now the Fed fund future rate is laying at 100%. That 25 basis points hike is built into this market. So we'll see how the rest of this shakes out. Let's go over and take a look at NVIDIA, NVDA. So last week you did have AMAT get hit. You had Lam Research get hit. They got hit again today. NVIDIA still laying there at highs. So bottom line is that NVIDIA's been in this consolidation going all the way back to January of this year. You're basically $10 higher than it, but at $10 at a 260 stock, that's not a lot of percentage. Stay right there, folks. Going to be coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank Bank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. And so, time-wise, this is how the summit is set up in Korea, folks, okay? Picture, we are at 4:30 Eastern Standard Time. At 9 o'clock Eastern Standard Time, that is 9 o'clock in the morning in Singapore. That's when Trump and Kim are going to basically meet. They're going to go on for 7 hours. So what we're going to have here in our own futures markets is that I suspect we're going to have by 7 o'clock in the morning, tomorrow morning, you're going to have some kind of a statement, and we'll find out what that baby wants to do to the markets. But that's the way this is set up right now. So, right, it's going to be pretty wild watching this whole thing shake out, and we'll see whether the statement moves markets, doesn't move markets in correlation to what the Fed does. I suspect the biggest mover out here this week inside the markets, I suspect, are going to be the Fed, you know. Because, and it's going to be interesting, too, to watch how this shakes out, because what you do have is that notes and bonds, they still want higher price, lower yield. The 10-year yield right now is yielding 2.95. The low for the last 3 months was 2.7. The high was 3.11. You know, that's on your 10. And when we go in Asia, you know, you want to hear mind blower? This is totally a mind blower. That Italy, even though Italy imploded a couple weeks ago, right? Italy went from a price point of, let's see, Italy, this is just a mind blower, actually. Italy went from 1.7% on the 10-year to 3.13 in 3 months. Well, we know that it actually did it in a day, but bottom line is that the low for the last 3 months was 1.7, high was 3.1. Italy, and this is the total disconnect still. So you can lend money to the U.S. government, and you get 2.95%. You can lend money to Italy, which you know we're broke, and it's still less 2.8%. So I don't think the problems over in Italy or in Europe in general are basically over. And I suspect what we're going to see is that you'll get that volatility basically coming back. The real question is, when does it come back? And how fast it come back. There's an article today in Bloomberg, which is kind of interesting. And what the article is stating is this: quant funds step back from stocks as hidden volatility builds. Funds tracked by Credit Suisse reduced equity exposure by 10%. And what they're saying is that cross-sector distribution spur swings in their returns. A record spike in equity volatility couldn't keep the quants to sell, but a bubbling market stress below the surface has finally spurred them to offload. Quantitative hedge funds on Credit Suisse Prime Services platform have ended their 18-month streak of relentlessly buying stocks. They've reduced exposure by about 10% over the last 2 months through the end of May. Over the past week, such funds have held broadly. Shifting undercuts in an aging economic cycle has spurred an uptick in the volatility of returns in factors tracked by quants such as value, momentum, and growth. It's also disrupting statistical models that track price relationships, according to Mark Connor, the head of risk advisory at Credit Suisse Group. Maturing growth, central bank policy, trade wars, they've all created these winners and losers among sectors in rotation across assets. He said, quants with thousands of long and short stock positions typically pair holdings when price swings are elevated, as they are obligated to cut leverage in tandem. Now an increase in the volatility of factor returns, which is hard to see when looking at headline indices, has spurred disinvestments. Below the surface dynamics show markets lacking conviction on key trends, with volatility inputs and risk models used by many quants at elevated levels. The positioning shift is significant because such funds effectively bought into the downdraft caused by February's record VIX spike, with the gauge now well below its 2-year average. Take U.S. tech stocks. In March, the sector posted its worst month in nearly 2 years, only to trade flat in April and then gain 7.1% in May. Yeah, a big move in May. Another culprit, regional rotations. Patchy economic data and political drama in Europe have spurred a bid for U.S. stocks. That bellies Wall Street's consensus coming into 2018 that less expensive equities in the euro area offer investors sanctuary. Yeah, no sanctuary in Europe. Changes in the economic cycle vexing factor performance. Dispersion is starting to widen, and that's when you need to be more clever about the styles and factors you need to be in with. For example, European value stocks had performed the best out of any quantitative style in April, according to J.P. Morgan. The sector delivered the worst one-month performance since the Brexit vote as of last week, according to Bloomberg data. Shifts in market leadership have curbed quant returns this year, the U.S. Bank wrote in a recent report. The cut in equity exposures, as per Credit Suisse, comes after January's record and is modest relative to the turbulent after the Brexit vote. But as one of the busiest weeks in the world economy kicks off in earnest, the shifting factor landscape underscores the challenges for robots and humans alike. You know, what we have, and this is why these downdrafts do get so quick, folks. You can see reading that article, that was on a fundamental basis, how those quants basically are trading. And of course, when the Credit Suisse, their desk comes out, bottom line is that, okay, so they own 10% less, which is a big deal because it's all about supply and demand. Okay, where's the supply, where's the demand? That being said, what we have that happens because of the ETF structures, that is the chicken and the egg. What ends up happening is that, you know, the reality is that when equities get sold or the ETF gets sold, guess what? If it's the Qs that get sold, now the stocks inside the Qs have to get sold. That gets sold down again, the Qs have to get sold down again. It's just a merry-go-round, and bottom line is that is what makes downdrafts very fast and furious. We go over to the GDX. The GDX closed, had 22 million shares traded. Not bad for a Monday. We're in summer trading. Monday and Friday, you're going to see light trading. What they did do at the close, they put 4.4 million into the close to get that net asset value right. So that's not a bad setup. You closed at the highs of the day. We'll see whether it can get any juice tomorrow. ABX, the largest weighting structure that was catching a bid earlier in the day, that closed at the high of the day too, up 18 cents. Newmont, which is the second largest weighting, that closed the high of the day too, 38.57, 2 million shares. 2.9 million shares. Okay, not bad. We're going to need basically more. The Gold Bugs Index caught a nice bid, and that needed it. Gold Bugs Index was up $1.34 over all the highs of last week, and that's what it needed because the Gold Bugs Index has been weaker than the XAU. Let's go take a look at Royal Gold. This is one of the leaders out here, RGLD. This is a royalty stock. Nice setup. Okay, it's just flat, but bottom line is that you're over this 90.74. And Royal looks to me like it's going to be one of the first ones to reach their all-time high once again. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks, and let's go over and we talk about, the biotechs have been on quite a run. There's no two ways about that. And when they fall, folks, they fall hand over fist. When we take a look at one of these, we're going to take a look at a few of them. One of them, the symbol is CRSP. It's CRISP. This is a biotech company. They research, develop, manufacture biological transformation, gene-based medicines, and other related products. Now, what happened out here today, so let's go see what happened. It seems obvious, but the lessons never seem to stick with biotech investors assigning billions of dollars in value to a medical innovation that's barely been tested in humans isn't the greatest idea. For those who need to learn the hard way, a fresh reminder came today as there's 3 separate companies that went down south. CRISPR went down $8. I'll go back to the other 2 in a second. Let's see what the story is about, though. So let's see. For those who need to learn the hard way, a fresh reminder came Monday. Shares of companies tied to the heavily hyped but unproven gene editing technology called CRISPR were sent reeling after 2 studies published in Nature found a potential cancer risk. There's been publicly a plenty for CRISPR. The technology received glowing treatment in a recent segment of 60 Minutes, and it's set to be subject of a rather high-concept crime story. Its discoveries likely will even receive a Nobel Prize for their efforts, but the approach hasn't been robustly tested in humans. The Food and Drug Administration recently delayed CRISPR Therapeutics' planned U.S. trial in a sickle cell patient because it had questions. The Nature study will likely add more to that. CRISPR-focused companies have weathered other disappointments that have turned out to be less severe than originally anticipated. Even this cancer finding comes with caveats. It may only be relevant to certain uses in certain diseases. And on Monday, the 3 main publicly traded firms focused on the technology: CRISPR Therapeutics, Intelligent Therapeutics, and Editas Medicine. All released statements pushing back against the notion that this research will have an impact on their programs. But the study's findings are a reminder of how little we know about potential unintended consequences, and either way, these papers may have a cooling effect on the investment, trial recruitment, and the FDA's willingness to give a broad or rapid green light to the testing. The bottom line, these are early days. There may be more setbacks. You don't have to. Bottom line is that. So we go take a look at CRISPR first. This has a market cap of $2.8 billion, and they take in, I think, 11 million. No, yeah, 11.9 million. This came down 15% today. Not the end of the world either. Let me just pull this back a bit. It came down hard. Looks like it wants lower price, but guess what? You know, we go back. This was a $13 stock in June of last year. You're 59 bucks. The next one was EDIT. This also is in the same business, evidently. This has a market cap of 1.7 billion, revenue. Yeah, these are all new companies. This is a little more revenue, 24 million, and this came down 9%. This is a consolidation, and you're basically at the top of the consolidation. And NTLA, this is, let's see, this is the low for the year is 12, the high is 35. This has revenue of 37 million. Those numbers are for the year too, by the way, folks. Now this one has a little more identification that this has already come down pretty hard. This came down off its high in March, went from 35 to 24, fast, furious, all the above. This thing looks like it wants to run down to $16.33. So bottom line is that action downtown. Let's go over to the IBB. We haven't looked at the IBB for a while. So the IBB is trading 109.98. Now the inside the IBB, your largest weighting structure is Biogen. That's 8%. Amgen 7.8. Gilead 7.4. Inside the IBB, you're talking about companies that do have huge gross revenues. Just wanted to explain that because we were talking about the exploration biotechs. And this baby's been in this consolidation for a long period of time. No wonder why we haven't been looking at it. It's been trading around the same price since September of 2017. And, you know, this actually used to be really highly volatile. Well, I can see the difference. Look at the difference. Actually, so if we go back, 2008, it's at $20. Starts creeping up by 2015. So it's 3 years ago we made the high, 133. Come down hard off this high. You've been going sideways. Still, the supply line is really large here. And the supply line, if you want to see technically a supply line, how it's hard to take it out, especially when you come off the high with volume, this is one of them. We had made the high in a monthly with 111 million shares. First month, it came down with 135. Now watch the next month. Next month, 222, and the next month, 234. The first time we got up into those again was January of this year with 60 million. So a correlation of 60 million going against that 234. Big number. And people are more than happy just to get their money back. And that's what the supply line's all about. Particularly, folks, when you see a supply line, this supply line is 3 years old. So picture something. 3 years ago, you were up at these high levels. You come down. Within the context of 3 years, guess what? Now you're settled and satisfied with anything you can get back, because this was as low as $80. When you're looking at 109, where that supply line is, all the way up to the price point of the highs, of course, of 133. You get people that bought higher that are saying, okay, man, I don't have to wait any longer. 3 years is long enough. I was down at 80 bucks. It's getting close to where I bought it from. Let me move it out. And that's what keeps equities, consolidations off of highs in general, particularly after you've got a mean downdraft. When you come off highs, when we come off highs with volume, it's a huge problem. Restoration Hardware, if you weren't with us a little bit earlier, they came out with big numbers. And guess what, folks? They are blowing the market away. They're up $5. They're up an additional $22 after the close. And that equity tomorrow is going to be in play in a huge way, because there's a 35% short interest, 35.6% short interest. And what we will see, let me just do the math on this for a second. So you're up $5 today. We're up, that's 118. We're at 140 right now, so it's 22. It's 27. Yeah, this will be, you're going to have broker-dealers basically making calls tonight on these short positions, because what you're going to see is another $25 would be 100% loss. And the way the broker-dealer community works, well, anyone in their right mind would work, they're not going to be taking that risk, and they'll be closing people out. You know, and if we look at the size of that number, so there's only 21 million shares outstanding on the float, that is, and 6.8 of them are basically short. So they got to be bought back. And if this thing, it's up $22 now. If this thing trades up $35, which it can in a heartbeat, my God, you're going to see broker-dealer community, they'll just close the positions on them. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now finished up 5. You get the NASDAQ up 14, S&P's up 3. So, Fed, folks, this is a one-day meeting. So we're going to have, I believe it's a one-day meeting. I got to check on that, actually. Bottom line is that at 2 o'clock on Wednesday, we're going to have the numbers. I suspect you get the 25 basis points. The real kicker is going to be, okay, what's going to be in that statement? The way that the bonds notes as well as the TLT have traded out here today, it looks like, hey, guess what? The market is saying that you have the 25 basis point hike. Other than that, it's saying, guess what? They're still buying notes. They're buying bonds. They're buying the TLT, which is the 20-year bond fund plus. So that is saying that the supply and demand equation inside those markets are saying that it's going to be a dovish statement, and we'll find out. Pretty quickly. Dollar index is still, you know, basically, and here's where there's definitely some divergence here. Each and every time that the dollar index tries to get back inside this lower range, you know, it hasn't got the juice, meaning no volume back inside the 93,480 number. We got there today, but we only did 19,000 contracts. It rejected lower price once again. If you are in the metals market, the biggest thing that as a bull that you can cling on to would be that silver contract. And the equities. The bottom line is that the GDX caught a bid today that closed at its high. HUI closed at its high. XAU closed at its high. That being said, the metal itself, bottom line, platinum, PLA. Let's go look at platinum quick. So platinum also needs a bid. Platinum's at 905. Yeah, that thing's been a dog, too. That thing's down last 5 months from 1,047 to 905. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking to you right back here, 8 o'clock tomorrow morning. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.